Hello and welcome. You're tuned into the Small and Midcap Show. I'm Hiral, Dadia, and with me is Hersh, Sayta. Hersh, a very good morning. Clearly, if you see from a market's perspective, from the day's low, you've seen a good recovery that has come in as well. We actually managed to inch above the 21,700 mark, but not holding those levels pretty closely. We are at 21,680 as we speak, but gains of around almost 0.9% coming in there. Let's quickly look at the top gainers. Adani Ports, Adani Enterprises. Two top gainers in terms of today's day of trade as we speak. Tata Motors is seeing a good run today, back above the 800 mark, and you have a Hero Motor which is seeing a good up move. Kotak Mahindra Bank also trading in the positive. On the losing end, you have names like Nestle, ONGC, Britannia, UPL, as well as the HDFC Life. These are the ones which are trading under pressure. Let's pull up a Bajaj Auto also on the screens on the back of the buyback and see what that stock is doing in trade, because pre-open did indicate a good up move. There was some cooling off that happened. There you go. Just a 1.5% up move now in terms of Bajaj Auto, and that's mainly on the back of the acceptance ratio at retail level, which will be absolutely on the lower end. If you see in terms of Bank Nifty as well, again, you're seeing a recovery after yesterday's session. We're nearly at the day's highest levels in terms of Bank Nifty, with 11 advances as well as one decline coming in there. And you have a Bandhan Bank, which is the top gainer with gains of 2%. Kotak Mahindra Bank, PNB, ICICI, as well as a Federal Bank, which are seeing gains little over 1%. Whereas you have a AU Bank, which is seeing cuts of almost 0.3 to 0.4%. So that's what the markets are looking like overall. But Hersh, overall, if you see in terms of broader markets, what's the trend that you're picking up? Because getting into 2024 as well, the anticipation initially was that probably you will start seeing some profit booking there, but the run has continued.
Absolutely, and the run seems to have continued, but the outperformance is not visible, at least in trade today, which is a little bit of a surprise. So good morning, Hiral. Good morning to everyone. Let's quickly pull up the Nifty Midcap Index, up around 0.4% or thereabouts, versus around 0.75% where the Nifty is currently at, and Nifty small cap largely in line with the benchmark. So that's a positive. Quickly on to names. Some of the names which are buzzing in trade within the mid-cap space. You have the likes of the Nykas, which are continuing to gain in trade well today. You're also 6+% in trade up higher for Nykaa. You're also within the Nifty small cap basket seeing good gains, the likes of an IRB gaining up 7% after a good set of December numbers, which IRB seems to have clocked. Positive reaction on that stock. Within the negatives, you have the likes of a Bikaji, a KEI, which are trading with cuts of around 1% or thereabouts within the small cap space. But in terms of specific names, you also have the likes of a GMDC up around 6% on the back of environmental clearance for their lignite plant, or rather expansion of their capacity, which will add substantially to their top line. We did speak about IRB Infra. You had within the large cap names, you had the likes of a Tata Motors, which came out with numbers up 2%, and you also have the likes of a Fino Payment applying for a small finance bank license, up around 2.5% in trade. So those are largely the names. But one of the stocks which is in focus, we have Skipper in focus today. The company has received approval to raise roughly 200 crore via a rights issue. Record date for that is set on as the 12th of January. The company's order wins have been good. The Q2 orders stood at roughly 6,000 odd crore, and the Q3 order wins also continue to be quite strong, and there is a good bidding pipeline as well. So we have the management with us largely with regard to what's going to drive growth on execution of some of these orders. We have Sharan Bansal, who's the Executive Director at Skipper Limited, who's joining us on the show live. Good morning, Sharan. It's a pleasure having you.
Good morning.
So Sharan, talk to us. What's the plan? 200 crore rights issue. Where are you planning to utilize this 200 crore? Because on a balance sheet size of roughly 800, that's a large amount.
Yes, sure. As I've been guiding for about a few quarters now, looking at the robustness of the sector and the strong order win performance that the company's had, we are expecting a very healthy top line growth of at least a 25% plus CAGR over the next 3 years. Now, obviously with this growth of revenue, we can expect that the working capital requirements of the company will also be going up. The idea of the management was that the entire working capital should not be only debt funded. There should be a fair amount of equity funding in that growth of working capital as well. So the 200 crore issue proceeds will largely go towards funding of increase in working capital, and some amount will be for general corporate purpose as well. So that essentially was the idea behind the rights issue, to fund the next set of growth for the company.
Right. Sharan, this is Hiral on the side. Now, with regards to where the rights issue is concerned from here on, overall, is this something which will be utilized mainly from a FY25 perspective, or are you seeing utilization happening in FY24 itself? That's number one. And number two, which segment of business are you expecting, that will drive growth?
As of now, the company is calling in about 25% of the entire rights issue as application in the rights issue. So you can assume roughly about 50 crores will be received in this FY24 itself before March. And the balance amount, the company has not put a firm date, but tentatively we expect to receive it by March 25. So that's the outlook when the entire rights proceeds should be received by the company. In terms of business outlook and segments, of course, our engineering segment and infra segment both have been doing very, very well. Not just because of the rebound in transmission and distribution orders in the Indian market, but also globally, because thanks to the renewables push, there is a large amount of T&D investments that we are seeing in the many key markets where we operate. That is the flavor of the season almost everywhere that we see. And we expect this trend to continue over the next 5 to 10 years. As renewable investments pick up pace, we should see more and more investments going into power transmission. That's the addressable segment for us. Again, our polymer segment has seen very healthy growth in the first 6 months. And we do expect that on the back of our national ad campaign, we should be seeing more and more sales growth in that segment as well.
Right, Sharan. Sharan, I just want to try and understand the execution of your order book. Roughly 8,000 crore is the order book you are currently sitting on. Please correct me if I'm wrong on that count. But talk to us about execution. By FY25, how much of this are you looking to execute?
September, it was about 6,000 crores. We do have a bidding pipeline of more than 12,000 crores for which we are expecting orders, and every day orders are coming in as we speak. The execution cycle of these orders you may expect to be roughly between 18 to 24 months. Of course, the government of India is very focused on providing connectivity of power transmission to 500 gigawatts of renewable power. So we can expect that, yes, execution will not be a challenge for these contracts. And of course, we do have a fair share of export orders as well in this overall order book. So 18 to 24 months is what you can expect the execution to take place in. Plus, of course, as we go along, new orders will continue to flow in.
Right. Sharan, polymer business is something where you are seeing good traction that is coming in. So overall, what's the trajectory looking like on that front? Number one. And overall, if you see, apart from the way the order book has been growing, how are you expecting the revenue mix to change?
Business, you're right. We've seen almost 40 to 50% growth in volumes as well as value over the previous 6 months. With the back on the strength of our national ad campaign, we do expect that momentum to continue. There is a strong push on the water distribution sector by the government of India through projects such as Jal Jeevan and Awas Yojana, etc. So there is definitely a lot of demand coming in there. In terms of the revenue mix, we do expect that because all our segments are growing well, we should continue to see a 20-10 mix. 70% on the engineering side, 20% on the polymer side and 10% on the infra side. Now, give or take 5% plus minus each in each segment, we do expect that mix to continue.
And are some of these new businesses, Sharan, margin accretive for you? Is that a positive as well going forward? So how will margins move?
Definitely, it is on the radar of the company to improve bottom lines as we go ahead. This is a very good time for us to be able to do that because we are enjoying an order book where we have, almost full revenue visibility over the next 2 years. Also, the company has consciously been moving to more and more export markets and more business coming in from developed markets. So we do expect that to contribute better to the margins. And in terms of, overall, currently, we do expect that, yes, margins will continue to be healthy from here on.
Right. Another question, Sharan, I have is the share of the non-T&D products, which includes railways as well as telecom. Now, that in the overall order book almost stands at around 42% for you. Taking the kind of orders and the capex that the government has specifically with regards to railways, how are you seeing that basket expand and how could Skipper be a beneficiary?
Our main segment focus continue to be power, T&D and telecom. We are there in the railway segment, although we are not a large player there. Telecom currently constitutes bulk of this non-T&D order book that you see, because we secured some large contracts from BSNL in the previous financial year. We expect that both power, T&D and telecom will see good growth in the years ahead. That's the two focus segments for us. Telecom, because of the overall 4G, 5G rollouts that various operators are continuously investing in. So that should continuously see growth. Of course, power T&D for us is not just an India play, but also a much more global play. Where we are active in about 65 countries worldwide. And, again, as I mentioned earlier, renewables are driving the need for more and more power transmission connectivity in a number of countries.
Right. Sharan, two quick questions with regard to borrowing. Where does your borrowing head from here on? Would you continue to fund some of the growth through borrowing? Of course, you're doing some amount of equity. And point number two, at what cost is this coming at? Because your interest cost seems slightly elevated. So just trying to understand what is the kind of rate of borrowing?
Our current rate of borrowing is about 8.5% to 9%. And this, of course, there's opportunity for this to come down as interest rates ease and the company's performance gets better. And of course, we are quite focused on bringing down our working capital number of days as well. The way we look at it is that the long-term borrowings of the company are only about 250 crores and roughly about 500 crores is what our working capital borrowings are. We feel this is quite comfortable. Our company has very, very healthy cash flows, so we don't see any challenge. Still, to be extra sure about the growth going forward, we've decided to bring in this equity of 200 crores through the rights. If there is need be for further growth through equity, company would be open to that in the future as well.
Right. Last question, Sharan, coming to you is clearly from a guidance perspective, revenue growth in excess of 25% CAGR for the next 3 financial years is what you've already, told the investors. And now taking into consideration the opportunities that already stand in the renewable energy space, the kind of bid pipeline that you have for the international markets as well, taking all of that into consideration, do you see any upward revision on that front, on the top line as well as bottom line? And to what's the milestone that Skipper wants to achieve in the next 3 to 5 years?
Well, I think it's a little premature to talk about the milestones of 3 to 5 years ahead, but certainly we do expect to hope to surprise the market on the positive side, where revenue performance is concerned, and hopefully come back next quarter on your show with a better guidance and more improved guidance going forward as well.
Sure, Sharan, we look forward to that, and it'll be a pleasure having you again on the show. But for today, thank you so much for all of that perspective for our viewers. It's time for us to slip into a very short break. We'll be back with discussing the Zee-Sony merger. So stay tuned to NDTV Profit.
Watching the small and mid-cap show. Clearly, if you go to see, you have the media space that is in focus, and last couple of trading sessions have been very interesting for all the names. Let's just pull up a few of the stocks. You have a Zee Entertainment that has been in focus, Den Networks, Hathway Cable, all of them is something that has been on everyone's radar over the last couple of trading days. Now, what's happening with this space, to understand more specifically with regards to where the Zee and Sony merger goes, as well as the broadcasters who've probably gone ahead and raised the TV channel bouquet prices, and that will happen from the 1st of February. To discuss more on this, joining us on the show is Jinesh Joshi from Prabhudas Lilladher. Jinesh, good morning and welcome to the show.
Good morning.
Jinesh, my first question coming to you is on the Zee-Sony merger. Firstly, there are media reports which are indicating that Sony India is looking to cancel the merger deal with Zee Entertainment, and they will issue termination before the 20th of January 2024. And this is mainly over Zee's CEO, which is Puneet Goenka, leading the merged entity. With him being on the board. How are you looking at this, and what's your view?
So, obviously, this development is a big negative. But let us think of this merger from a very strategic standpoint. Let us think for the time being that the merger does not go through, and what are the gains that can come through. Obviously, the Zee stock price will correct by about 30-40% or even more from here on. So they have nothing to gain. Even if we talk from Sony's standpoint, if both of them do not come together, and on the other hand, if Disney and Viacom, they merge, then the competitive position of Sony also gets weakened. So even they do not have anything to gain if the merger does not go through. So logically speaking, it is in the interest of both the parties to come together and find out an amicable solution. But going by what the media reports are currently, apparently it seems that the discontent over the CEO post remains from both sides, and we'll have to wait and watch as to what the exact outcome is from here on.
Right. So, Jinesh, then what would you advise investors who are holding Zee Entertainment to do? Secondly, we've also seen large blocks that have happened on a Zee Entertainment today. So, a lot of buying interest has come in in today's day of trade. What does that actually signify, or what does that actually tell you?
See, that's a tricky question. I mean, what to do with the stock? I'll give two answers. I mean, first is that if you believe that the merger does not go through, which to my mind still is a very low probability, then as I mentioned previously, there is a probability of further correction in Zee, because obviously Zee on a standalone basis is struggling big time. And again, it will get a CG discount. So I think there will be more correction in Zee if the merger does not go through. But if it goes through, where I feel that the probability still is a bit high, and they might come up with an amicable solution with respect to the CEO post, then obviously the upside is there for the taking. But currently at this price, obviously it's a double-edged sword, so to say. So I would suggest that someone who's already into the stock, they should probably wait and watch for the time being. And fresh entry is something which can be very tricky at this point in time.
Right, Jinesh. Hersh also joining in the conversation. Jinesh, we have, some sort of confirmation with regard to broadcasters increasing prices. Apologies for that. How does that impact valuations of companies as we speak? And which ones are the better placed with regard to having the absorption capacity for these price hikes?
So yes, I mean, after NTO 3.0 came into effect, we saw the price hikes being taken by majority of the broadcasters some time back. But very recently, the broadcasters have filed a new RIO, and which signifies a price hike in quite a few bouquets, even for Zee, Viacom, etc. I think this is perhaps to cover up the content cost inflation, because if you look at the price which they have paid to acquire some of the sports properties, that is sky high, and hence you might see the bouquet prices being increased, especially for Viacom. Even for Zee, we have seen some marginal increase of about 5 to 10% in bigger bouquets. So this essentially should help their subscription revenue. So if I talk specifically about Zee, their annual subscription revenue is in the band of about 3,000 plus crores. And I think we should see a mid-single digit hike in the subscription business because of implementation of NTO 3.0.
Okay. So that's with regards to the price hikes and all. Jinesh, so now that we are pretty close to the Q3 earnings season, what's your view on the media space overall, and what would your top picks be?
So yes, I mean, this quarter again, if I talk about broadcasters, we have seen some softness in the ad environment, and also because of the fact that World Cup was there in this quarter, we see some bit of shift happening in ad spends from GC to sports. So it will be a comparatively a weaker quarter for broadcasters. We expect Zee to report a decline in domestic ad revenue for this quarter. Margins can be slightly better at about 10-11% for Zee, but it will be lower than what it was in the last quarter. Talking about the other name which we cover, which is PVR. Again, in this quarter, I mean, if we compare it with the previous quarter, which was a blockbuster one, you will see some softness come through, because the overall box office collections have seen about 20% plus kind of a sequential decline. And again, if I talk about the content slate for 4Q, that does not appear to be very exciting, so to say. So I think even PVR for a couple of quarters, one has to be cautious. And Zee, as I mentioned, is a double-edged sword at this point in time.
All right. Jinesh, also wanted your views on something like a Nazara Tech. You have a business which is more or less in acquisition mode most of the time over the last 2 years since its listing. Of course, very healthy gains seen by shareholders. Last 6 odd months, 50% plus with regard to shareholder returns. So very solid there. How should one look at valuations? That's point number one. And the second piece is with regard to the whole gaming controversy that's playing out with regard to GST.
So to answer your second question, yes, that GST implementation of 28% on full VAT value, obviously that has impacted the real money gaming space. But if I talk specifically about Nazara, their contribution of RMG is roughly 5% or even less than that to the top line. So the impact on Nazara is not very high, so to say. But if I talk about their business, I mean, few of their acquisitions, prima facie are facing certain headwinds. I mean, be it Kidopia because of a change in the Apple's privacy policy, or for that matter, their recent acquisition, which was into the EdTech category, where they lost one client and are witnessing a decline in revenue in that segment as well. And then even RNG, which I just mentioned. So a couple of business segments are facing certain headwinds. But obviously, I mean, Nazara coming from a very acquisitive mindset, and given the fact that it operates in a sunrise industry, we should also pay attention to the cash which they have. I think they have about 1,300 crores of cash on the balance sheet, and there is a very strong probability that they might acquire a few companies in next, say, about 6 to 12 months. So I think the re-rating will depend upon the valuation at which they are acquiring these companies and in what categories they acquire. So the growth can be strong from here on, but we feel that one has to be watchful given the fact that a couple of segments are not doing well. But re-rating will depend upon the capital allocation decisions of the management.
Right. So these are few stocks one should be watching out for as well. Thank you, Jinesh, so much for joining us on the show. If we can just quickly pull up a 5-day chart of the media index, and that'll tell you what's happened. It's mainly Zee Entertainment that is a big overhang as of now, but a good rally that we've seen over the last couple of trading sessions in terms of Den, Hathway, and few other names as well. So that's with regards to where the media space goes. But completely out of time on this show. With that, it's a wrap on the small and mid cap show. Lots more news and updates on the other side on NDTV Profit.